Hello everyone, I am here to briefly walk through the landmark decisions of the 56th GST Council meeting held on September 3 and 4 under the chairpersonship of Mrs. Nirmala Sitharaman, the Honorable Finance Minister of India. The Council has drastically reduced the existing slabs of 5%, 12%, 18% and 28% into two main slabs 5 and 18% plus 18 plus 40% to sin and luxury slab for the selected items. Approximately 99% of the goods in the 12% slab move to 5% and 90% of the items in the 28% slab shift to 18%. These changes come into effect on September 2022 coinciding with start of Navaratri. Items like UST milk, ready-made foods like parathas and critical life-saving medicines are fully tax exempted. Every products including chocolate, noodles, butter, personal care items such as soap, shampoo, toothpaste, snacks, bicycle and more are now taxed at 5%. Goods like cement have seen a drop from 28% to 18% is a boon for housing affordability, and small car and two-wheelers also now attract 18% tax. Certain items like pan masala, cigarette, ultra luxury goods carry 40% preserving revenue from discretionary spending. All individual life insurance and health insurance policy including ULIP and reinsurance have been granted full exemption. Simplified multi-stage registration for small e-commerce suppliers reduces compliance burdens and boosts market research. Revised rule for intermediary service now links supply to customer location, restoring export status and refund eligibility. Companies with inverted duty structure will receive 90% of provisional refunds from November 1, 2025, easing cash flow concerns. The Goods Service Tax Appellate Tribunal will start accepting appeals by September 2025 and move to hearing by December 2025. A deadline of June 30, 2026 has been set for pending case filing. These rate cuts align perfectly with the upcoming festive season, offering significantly relief and demand stimulus. Cement, construction, automobiles, consumer goods, insurance and e-commerce sector will likely to see growth. Fiscal experts caution potential shortfall for states estimated between 85,000 to 2 lakh crore annually, but the new 40% slab for thin goods aims to offset some losses. Long-term gains through increased compliance and consumption are expected. So, what are the structural reforms still pending? We can consider it needs to be added in the future. Petroleum products are still outside GST. This exclusion causes tax cascading, high fuel prices, fragmented indirect tax structure. Build political consensus to bring petroleum under GST to ensure full value chain tax credit and national uniformity. Alcohol controlled by states. Limit revenue potential and uniform taxation on sin goods. Consider phased inclusion with appropriate sin taxes. Technical glitches still occur during peak filing dates. Return reconciliation, e-invoicing and matching are not always seamless. So the improvement needed is make GST infrastructure more robust, especially for MSMEs. Business still requires multi-registration across state. So one nation, one registration is the expectation of the population. So move to a single, it would be highly suggestible to move to single pan based registration with the state-wise place of business tagging. Also about the return filing simplification, despite GSTR1 and GSTR3B remain cumbersome for small trades, improvement needed a truly single auto-populated reconciled returns. Revenue sharing. States concerned over revenue shortfall persist. Many fear that slab reduction like in 56 GST Council may reduce their GST tax. So the suggestion is to create a transparent revenue neutrality mechanism possible via revenue assurance formula and flexible rate bands. So future integration and possibilities suggested. Long-term vision could include linking GST return with income tax filing for seamless compliance. Fraud detection, invoice matching and fake ITC claims can be addressed using AI and ML. So these are all the major things considered as an improvement in the GST Council. So while the 56 GST Council makes a bold step forward, India's GST still has miles to go, especially with area like petroleum inclusion, compliances, IT improvements and fair revenue distribution. The focus now must shift, making GST not simpler but smarter, more inclusive and truly one nation, one tax in practice, not just for the principle. Thank you everyone.